heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Paramount replaces its CEO as M&A buzz overshadows results. Full coverage ahead.
Plus, we push ahead to results from Amazon, AMD, and Pinterest, all reporting after the bell.
And former Binance CEO, that's CZ, heads to court as prosecutors seek 3 years in prison. We'll bring you the latest headlines as they cross. But first, a check-in on these markets. And look, the macro picture not looking so pretty today, and it forces stocks lower. You get, well, the cost of labor at the moment, the ECI number coming in higher than expected, and, well, overall confidence from a consumer plunging. That means we're not looking so pretty heading into a Federal Reserve meeting that, of course, ends tomorrow. And we hear from Jay Powell, off by 0.4% on the Nasdaq. 10-year yield pushing higher, of course, when borrowing costs rise, so stocks fall. We're at 4.66. That's what usually the trend is. We're seeing dollar stronger versus the Japanese yen today, a complete flip reverse from yesterday. It looks as though Japan did indeed have some intervention into the markets to try and prop up the yen. For now, it's weaker against the US dollar. Let's move on and have a look at what's also weaker versus the US dollar. Bitcoin, along with other risk assets, Ed, on the downside, we're up by 2.7%, 61,000. This is wrapping up to be a pretty poor month of April, the worst since, of course, the FTX scandal, down somewhat 16% over the course of April for Bitcoin. And indeed, we're seeing a pretty poor month for stocks more overall. Nasdaq, I think, having its worst month since October. What are you seeing on the micro today?
OK, so there's a lot going on. Real quick, Tesla is down more than 4%. The information reporting the entire supercharger team is gone. But remember, 24 hours ago in Monday's session, 15% gain, biggest jump since March of 2021 on FSD tentative approval in China. We'll dig into that later. Then there's earnings. AMD after the bell, we know the story. How well, but above or below, is the MI300X done relative to expectations? Then you got Amazon. After Alphabet and Microsoft, cloud growth driven by AI. We know those stories, and we'll look ahead to that later in the program. Our top story is Paramount Global. So, CEO Bob Bakish is gone, replaced by basically a committee of executives. They released earnings. No one seems to care. The question is about M&A in the future. The stock down 3.3%. Let's go right to Bloomberg Intelligence analyst Geeta Ranganathan to try and understand what's going on. I love the kind of headline of your research overnight. Basically, earnings are non-event, eye on M&A. But just summarize what last night was like for you and what you learned.
Yeah, the earnings call, Ed, was kind of really bizarre. I mean, it was, a 7-8 minute call, basically one of the shortest I've ever seen in the history of media earnings. There were no questions from the analyst or the investment community, and it was just basically the CFO outlining the details of the quarter and, the three-person committee kind of giving their little spiel. But I think, yes, there were some encouraging elements from the first quarter results. But of course, M&A is top and center. Overall, I think that the key takeaway is that this is peak uncertainty right now at Paramount. We really don't know what's happening with ownership. We don't know what's happening with leadership, other than there is this committee, but obviously it's a stopgap arrangement. And there's no clue in terms of what the future direction or the strategy is.
Have you ever experienced this, Geeta, this lack of clarity coming from leadership, coming from the company itself?
Yeah, I mean, this is kind of a one-of-a-kind situation, Caroline. I mean, obviously, Sherry Redstone here is desperately trying to get a deal done with Skydance, which is why she had to get rid of Bob Bakish, who was opposing the deal pretty vocally from the get-go. There is a looming deadline. May 3rd is the day, which is Friday, is the day when the period of exclusive negotiations ends. And so they're trying to do everything in their power to get to that finish line as quickly as possible.
Well, we dig into what is a very evolving story, but ultimately, with some decent streaming numbers come from Paramount, we want to dig into all of that. But first, we thank Bloomberg Intelligence analyst Geeta Ranganathan. Let's continue the conversation with an expert in the field of media, and ultimately what on earth this landscape is like to try to evolve Paramount going forward. John Klein's with us, co-founder and CEO of the sports streaming platform Hyde Media. You're also former president of CNN, executive VP of CBS News. Boy, do you understand the internal workings of these sorts of companies. And I put it to you again, I mean, there's a corporate governance issue going on at the moment, but what should Paramount try to be doing in terms of its fundamentals right now?
Well, you know, I have experienced this before because I was the media advisor to the show Succession. And I have to tell you, if, so Mayhem was our middle name, but if they had come to me with a plot twist that said they were going to dump the CEO 2 hours before earnings, I would have thrown it right back in their faces. I would have said, no way. Anyway, look, every acquirer feels they can either grow an asset or squeeze additional profit out of the distressed parts or just sell off the parts. I wouldn't be surprised if David Ellison feels that he lands in the growth camp. He's young, he's energetic, he has excellent taste. I love some of the movies that he's produced. And he's got Jeff Shell as a partner, and Jeff is a really savvy operator, as he was when he was CEO of NBC Universal. I think that the challenge for any traditional media company in a landscape that is dominated by the tech giants, right? Apple, Amazon, Google, YouTube alone accounts for 10% of the TV viewing now on televisions, not on devices. The tech giants are dominating the media landscape, and so whoever ends up owning Paramount has to think hard about that. They have to think about streaming as a strategy. Because what streaming does is
John,
it unlocks...
John, let me just jump in real quick, John, because I get that. They're technology companies. They're good at technology. Yeah. Caroline and I were discussing before the show, I quite like Paramount. I like the streaming platform. I watch all my Champions League football on Paramount Plus. I liked Halo. It was pretty good. I like some of the Paramount movies, Top Gun, as an example, the Transformers movies. Who doesn't? What's missing then? What's the fix?
I'll tell you what's missing, AI. AI is what's driving streaming because it powers all those deep audience insights that allow you to make smarter programming decisions, more precision targeted marketing decisions. My streaming platform has seen our cost of acquiring a customer drop from $34 to $2 in 1 year's time, thanks to precision targeting AI. And David Ellison knows somebody who is pretty good at the AI piece of it, and that's his dad. And his dad is one of the investors. Oracle is going to be, among the investors in this. And if you add Oracle AI power to some of the assets that Paramount owns, you inch closer anyway toward the tech giants. You're not a giant yet. Their market cap, I think, is 350 times smaller than the big boys, but you're heading in the right direction. And that would be a smart thing for them to do.
So for you, this is a tech growth perspective coming from Skydance Media. A lot of investors, though, have completely seen an erosion in the value of their non-voting stock. They're frustrated that this isn't going to be some more open bidding competition going on. John, is there a better, more clear way of doing this to try and hear clarity from Skydance and then see what others say the reports of an Apollo and a Sony could add themselves?
Yeah, I mean, Skydance needs to play its cards close to the vest in the short run. And of course, if they end up winning the prize versus Apollo/Sony, then they've got to lay out a strategy, and that's what the street is going to be looking for. And AI can't be ignored, and should obviously be a central part of things. But look, family-controlled or single entity-controlled companies invariably lead to this kind of messiness. And if whoever ends up with it, at least you would hope that the operation will run more cleanly moving forward.
John, of all the subscriptions you can have, where does Paramount rank?
Look, I'm not alone in saying I churn constantly. Did you know that only 7% of people will tell you that they plan to stick with the streaming platform that they currently subscribe to this month? 93% of viewers intend to leave. And that's because people watch shows and stars they don't watch platforms. That's equally applicable to Netflix and Disney Plus and all of them. And so, you've got to think in terms of franchises that are driving the bus for a business. So, for Paramount, the first one that jumps into my mind is the NFL. I mean, the NFL dominates viewership on whatever platform it airs on, whether it's streaming on Amazon Prime or it's the traditional broadcast networks. News streaming services are also drivers of streaming, and CBS just rebranded their entire CBS News streaming entity into CBS News 24/7. And so they've got to be thinking streaming first, direct to consumer first, AI first.
Right, and the masters forward as well, a good example. If you're going to cut one chunk off or divest a bit, what would it be?
The cable channels just, they're kind of hopeless. I mean, they've lost their luster. I think, they tend to just play the same show 50,000 times in a row in a block, which I like as a consumer. I can put The Office on other channels, and all that. But it's a dwindling asset. Everyone knows it. It's not a surprise. I think they had some offers for some of the cable channels in the past year. Part of the friction between Redstone and Backish was that he didn't sell some of them fast enough or at all. But that's where you'd have to look.
John, I'm just going to go bigger here because it's so interesting what you bring about the technology story that needs to be injected into Paramount. And of course, you were at Binance AI, which was sold to Apple. You've got a big focus on the AI compartment. But do you think, more broadly, this is going to be happening elsewhere in the industry? Paramount is but one where we think M&A or rejuvenation is needed within some of these legacy businesses.
Oh, yeah. I mean, look, the market cap gap is just enormous. I mean, the tech giants are 350 times bigger than even the biggest, most well-known traditional media companies, Warner Brothers Discovery, Netflix even, I think we have to start thinking of as a traditional media company because the only thing they do is entertainment programming, and now they're introducing sports, but they have no tech component, they have no theme parks, to mitigate risk or anything. So they're a pure play media company. I think there's bound to be consolidation amidst those. And if Paramount is smart about pursuing the AI and streaming opportunities, they become a more attractive merger or acquisition target as those smaller players, the smaller planets, come together.
Joining Bloomberg Technology, a show available live and on demand on lots of platforms. Will be around for a long time. Hang Media co-founder and CEO, John Klein. Great to have your perspective. Thank you. Now, coming up, we're going to take a look at the intensifying tech war between the US and China, just days after Elon Musk reached that big milestone on FSD. That conversation coming up. This is Bloomberg Technology. The law requiring TikTok to divest or be banned could be a pivotal moment in what is an escalating rivalry between the US and China in the context of technology. TikTok v. US would almost certainly head to the Supreme Court, which would have to weigh the government's security concerns against the free speech of the company. And it's all but certain that China will retaliate against the US. And that is according to those that watch China's government and its responses closely. There's a lot to discuss right now in the relationship between China and the US in the context of tech. And to do that, we bring in Junheng Li, the CEO and founder and head of research at J.L. Warren Capital. Let's just start with the TikTok case study. ByteDance is the world's most valuable startup, a Chinese giant, but private. And it said, we have no plan to sell or divest TikTok in the States. But it's somewhere that the States is just not going to accept. Your view on that outcome?
Well, I think it's inevitable that the two entities, the U.S. operation, will be separated from the parent because consumer data in U.S. are just way too rich in content and way too sensitive. For the same token, I mean, I just think the recent announcement of Tesla and Baidu is a very case-specific situation. It's not applicable to sort of a broad de-escalating tension between the U.S. and China argument.
Okay, that's so interesting because It feels as though there are these two different narratives. If you're a company that's already within China, that's able to do ultimately partnerships within China, as we've seen Tesla and Baidu, for example, you will be allowed to continue and indeed potentially to thrive. But others, this is not going to be occurring. What do you think of some of the Chinese companies trying to make their presence known here in the United States? Temu, for example, become quite the addiction. What will that be allowed, do you think, or is this very case by case?
Well, I think it's okay if you are small and you are under the radar. But when you get to a certain scale and when you catch attention, that it becomes sensitive and topical and political. And I think the broad sort of a political tension definitely is a headwind, and it's unlikely to be resolved in any time soon.
Junheng, your specialty, your research is largely on US companies with exposure to China. So what was your reaction to Tesla getting tentative approval for FSD?
I think the market runs ahead of itself by so much. The partnership, you can say it's a milestone, but it's really light in the terms. So think about 25 years ago when Ford, GM, BMW, Mercedes came to China. So they need to have a joint venture to gain the license or ability to manufacture and sell cars in China. So in this case, it's kind of similar. So Tesla is a foreign entity. To be able to collect data and do what it does in the US, which is autonomous driving, it needs a local partner. So in this case, it's Baidu. It can be anyone. So Baidu will be storing all the data Tesla collects on the road and supervise the data usage and filter it before the data gets returned to Tesla for computing. And what we do not know, and it's critical to this puzzle, is that how the data will be computed, whether it's onshore or offshore, and using what capability. So, I mean, I think that's the critical piece that's missing, and yet the market just runs ahead of itself.
It's such an interesting point to Caro's question on partnership. You know, in my study of China's autonomous driving landscape, Baidu is a domestic champion. Baidu has its own ambitions for autonomous driving. And Tesla could have gone with anyone, as you point out. Why do you think they went with Baidu as opposed to another robotaxi company?
I think it could be anyone. It could be Baidu, it could be Tencent, it could be any mapping company. Baidu is just the gatekeeper on behalf of the government. And what's also unknown is whether this kickoff of FSD program in China, whether it's broadly applicable to all Tesla vehicles on the road in China, or whether it's just applicable to a group of demo fleet, which is about a couple of dozens, driving Baidu stuff, supervising or understanding the data collection process. That's unknown, and that's critical.
And it's critical for its longer-term value as a business that's going to be standing apart from other auto companies, legacy businesses, because of its AI plan. And I'm interested, therefore, whether you think there's that much value with what's just gone on between Tesla and China, and or if that's a sacrifice that ultimately has to be made.
Okay, in China, Tesla is actually not the leader in FSD because it didn't, or autonomous ADAS, autonomous driving, because it didn't have the license to collect data. It doesn't have the data. Whereas the competition, Huawei, Xpeng, NIO, they all have their autonomous driving system that's on the road. So they use NVIDIA's Orin chip with in-house coding, right? So that's their respective solution. So I think this partnership is Beijing expressing sort of a relaxation of discrimination against American companies. Say, now we allow you to have access to the mapping data under the supervision of a Chinese entity. And you can, make good use of the data so that you are on the equal footing with your competition in China. That's the extent of it.
It's an interesting landscape that you continue to bring clarity on. J.L. Warren Capital CEO and founder, Junheng Li, thank you for deep diving there. Meanwhile, look, we were just talking about the power of AI, and seemingly it's been helping Samsung of late. actually managing to top analyst earnings estimates. That's after, of course, this big chip maker. The division actually returned to profitability. Companies like Microsoft, Alphabet, have been leading a surge in spending on AI services, and some of that spending goes to Samsung. Up a percentage point. This is Bloomberg Technology. Colleges in the United States, many are rushing to confront some pro-Palestinian demonstrations on campuses, with disciplinary actions escalating and campus life really thrown into turmoil as the academic year comes to a close. Over at Columbia in New York, dozens of students entered a campus building known as Hamilton Hall after midnight on Tuesday and barricaded themselves inside, piling tables, chairs to block doors and covering security cameras. We want to go live to Columbia University. On the ground is Bloomberg's Scarlett Fu. And we want to make clear, this is something that's happening across the US, but it's also happening across Europe, outside German parliament at the moment. We're seeing it happen at the Sorbonne in Paris. It's a global element, but what's happening on the ground right now with you, Scarlett?
Yeah, this is ground zero, Caroline, for the pro-Palestinian protests sweeping across U.S. college campuses and around the world, as you said. About 11 hours ago, dozens of Columbia students entered Hamilton Hall, which is behind me here. They've unfurled banners. One says Free Palestine. On the other side, there's another banner in front of Hamilton Hall that says Intifada in red. As you mentioned, they've barricaded themselves inside. They're occupying the building. They've covered security cameras with black trash bags. And this is a building that is, of course, storied because it has a history of student occupation. In 1968, students protested against the Vietnam War. In 1985, students took over Hamilton Hall to demand that Columbia divest from companies that do business in South Africa during apartheid. And it is from that they take inspiration in making their demands this time around. Clearly, this is an escalation, Caroline and Ed, from the encampments that Columbia and Barnard students set up about 2 weeks ago out on the South Lawn in front of Hamilton Hall when the president of Columbia, Manu Shafiq, testified before Congress. The school had given students a deadline of 2 p.m. Monday, yesterday, to clear the encampments. Some did, but clearly some had chosen to double down.
Scarlett, real quick, what specifically they're demanding? I just don't get it.
Yeah, what they're demanding is financial transparency when it comes to the almost $14 billion endowment that Columbia has, as well as divestment. Divesting from Israeli companies and companies that do business with the Israeli government. Now, that's obviously easier said than done, given that endowments don't just invest in companies and bonds directly. They invest in private equity, hedge funds, hard assets. So it's difficult to untangle all of that.
Bloomberg's Scarlett Fu on the ground at Columbia. Thank you. Stay with us. We'll be right back. This is Bloomberg Technology.
We welcome now our Bloomberg TV and radio audiences worldwide to discuss what is occurring at Paramount. Currently, we'll shine a light on how shares have been trading lower after, well, first quarter earnings actually beat expectations. But what's actually taken the focus of Wall Street is the CEO, Bob Bakish, stepping down, being replaced by a trio of executives now being depended on, seemingly on an interim basis, to lead Paramount amid what seems to be ongoing speculation of a deal with Skydance. We want to get to a key long-term investor in Paramount who's been in the name since 2006, who believes in the streaming opportunity and the value of its content. It's John Rogers, Ariel Investments founder, co-CEO. You've been throughout this business in its many iterations. And I just want to focus first, John, on yesterday, growth being borne out, being shown by the business, particularly in its streaming, thanks in many ways to the Super Bowl. But it was overshadowed by the departure of Bob Bakish. What did you make of the move?
It was pretty shocking to us. Ariel's been in business for 41 years. We've not seen anything remotely like this. It's just extraordinary. And it can't be good for shareholders to be able to have all this uncertainty at earnings season. You're in the middle of a merger and acquisition transaction. You're negotiating with Charter Communications. All these important things are happening all at once. And you need the CEO in place. So this has just been very, very disappointing, disheartening. And also in the context of what you said, business has been getting better. A lot of the initiatives that Bob and his executive team have worked on are really starting to show fruition. So the timing just seems extremely, extremely problematic.
Let's just talk about probably why Bob Bakish has exited. And it's because he felt that the negotiations reportedly underway with Skydance were not within his agreement. Now, Sherry Redstone is a controlling shareholder at the moment with, of course, National Amusements. It seems to be the deal that she's looking for with Skydance. How are you currently dealing with the reports of a so-called sweetened deal? What would you make of a combination of Paramount with Skydance?
Well, we don't know enough. We've read all the same, pieces that have been written about this, and institutions like Puck have had really good information that we've had confirmed. And so if this transaction really is focused on Skydance, we think that may possibly have a chance to work, but we really would much rather see the Apollo deal with Sony that's been so rumored to be out there to get certainty of, Apollo's a world-class firm with extraordinary resources. Sony has proven to be so successful, in this industry. That seems like a marriage made in heaven. And so we wouldn't rush to the altar with a smaller company that's not as proven as Apollo and Sony.
John, good morning. It's Ed in San Francisco. Do you get any sense, because you've held this idea that we should look at other offers on the table for a while. Do you still hold that belief, but actually the hope that other offers will be looked at?
Well, that's what we hear. We had a lot of confidence in management. It's been nothing but straightforward and candid with us that they cared about all shareholders. And, as you know, the employee bases all own the secondary shares. So we really have been very, very hopeful that they were going to do the right thing for shareholders. And that's been something that's been committed to us consistently. And we believe them. And we just continue to think that you don't need to rush. When things are going well, this is not a melting ice cube. This is a company in recovery, in a turnaround mode. And we want to make sure that all shareholders get to be able to take advantage of that. And the price that Skydance is suggesting seems to us, from what we've read, much lower than what we would get from the Apollo-Sony deal, and many others that could possibly be out there if this company was truly shopped around. And the final thing I would say is the directors, we know several as independent directors, and we know that they're committed to doing what's fair for all shareholders. So I'm hoping they'll be able to get to the finish line.
John, what does a change of ownership structure or this M&A path fix for Paramount?
Well, I think that with Apollo and Sony, you would end up with enormous resources that would help them with their balance sheet that has, gotten higher than we would have hoped. You'll be able, if you're working with Sony, Sony's been an expert at being an arms dealer, being able to use content in ways to generate cash flow and profits, and have the extraordinary library that Paramount brings, the history of Paramount's lot, where they have been able to make movies for generations. And there'll be enormous synergies. I think the synergies between Sony and Paramount are much, much greater than you can imagine with a smaller company like Skydance. So we're really hopeful that you'd be able to get great synergies, higher cash flow, and an experienced management team that will be able to make those tough calls of what happens with Paramount Plus, how much do you use content there, how do you use it in selling into other competing services like Netflix. We want that kind of experienced leadership that has been proven. And I know there are some other large streamers out there that could possibly also get into the mix.
We are, of course, with John Rogers of Ariel Investments, founder, co-CEO to our radio and TV audience. John, regulatory issues, though, with both potential tie-ups. Is that a concern for you?
I think it's a modest concern for the real large guys that are out there. I understand that people would be worried if Netflix, for example, was to buy Paramount Global. But ultimately, I think if people are really looking at this for the long run, there's been lots of litigation around some of the regulatory constraints that are out there in today's economic system. I think ultimately rational people will see, do you want to see Paramount Plus collapse? Do you want to see all those jobs lost? Do you want to see a world-class American company in disarray? Or do you want to see it find a great parent where they can merge and have a successful growing business over the next decade or so. So I think I'm hopeful that regulators will be able to make the right decision, have an open mind about all the various different possible combinations that are out there. And I certainly think the Apollo Sony deal should not have any significant regulatory concerns.
John, you've written to your own investors in your Q1 report, really saying, look, you're not an activist investor, but you feel it's your fiduciary duty to raise concerns, particularly from a corporate governance perspective here. And I want to go back to the fact that you have held this stock throughout these iterations, and you've seen the fact that there was this controlling shareholder. Did you sort of worry this might ever evolve from this corporate governance structure? Particular, your worry was the fact that 3 independent board members have recently stepped down amid this M&A speculation.
You know, over the years, as I've mentioned, over the 41 years, we've not seen anything like this. I've never, in all the years of owning stocks that have dual class shares, I've never seen a scenario where the A shareholders were going to get a significantly larger premium than the B shareholders. And that's just something we've never seen before. And there's been a lot of smart investors. It's, factual over the years. Warren Buffett's been a shareholder. We know Mario Gabelli, my friend Mario's been a shareholder. We had several good, smart people looking at this. And we've always felt that people would do the rational thing and do the right thing for all shareholders. That's what management's told us. Frankly, that's what Sherry has said over time. And so we think that this is something that came as a real, true surprise. And it's something, again, like we've never seen before.
John, I watch the Masters on Paramount Plus. I get my Champions League football through Paramount Plus. I liked Halo. What is it that you like about Paramount's existing portfolio and offering?
Well, you started at the right place. They have extraordinary content that you must see. The Super Bowl, had great ratings. Grammys were great. You mentioned the Masters. They've got great scripted shows. The CSI franchise. The news franchise, CBS Sunday Morning, 60 Minutes, CBS Evening News, and this robust history. But then you put on top of it this extraordinary library with, the Paramount greats, Mission Impossible and The Godfather. You could go on and on and on. They've got Pluto, which is an extremely successful streaming service. You've got worldwide assets that Bob Bakish used to run that are extremely valuable and seem to get ignored by the analyst community and the value that's there. So they have a well-diversified group of assets, many hidden assets, real estate that hasn't completely been utilized, institutions like Showtime and BET that I wish they had found a way to have sold earlier. But these are real, true assets to this company. And I think sometimes people get into the groupthink of the moment. They're worried about the cord cutting, and they're forgetting to value all of the assets that Paramount Global has.
You're a value investor. You look at the value.
Yes.
John, you also say you don't sell into chaos. What do you do, though, if a deal with Skydance goes ahead?
Well, we've been looking at all of our options. We did write a letter to the board of directors explaining our position. We've been, of course, talking to expert legal counsel, and our general counsel is terrific, and she's been on top of those issues. So we're looking at all of our alternatives, and we'll see how this all plays out. But we would like to see this play out in a way that is very constructive, because it would be not a good thing for a Skydance to be trying to buy a company where you're in litigation with all your shareholders, or many of your shareholders, I should say, many of your shareholders, and at the same time, your senior management's not going to be happy if the deal isn't fair for the B shareholders. That's the management team owns. And as we all know, M&A is difficult in the best of circumstances, getting all the synergies done and all the tough calls that have to be made. And it would be a difficult environment, I think, for them to be able to be successful while you could have such a cleaner deal with an extraordinary company like Apollo and Sony.
John Rogers, Ariel Investments founder and co-CEO, grateful for your time. Thank you.
Thank you.
Coming up, we push ahead to earnings after the bell and take a look at the state of advertising ahead of Pinterest results with Integral Ad Sciences CEO Lisa Utschneider. This is Bloomberg Technology. Welcome back to Bloomberg Technology. A quick check on the markets and 3 names that we're looking because they report earnings after the bell. You're either an AI or advertising story or you're both. AMD up 0.4%. The story is really clear. The MI300X is their current generation AI accelerator. They were on track to do $3.5 billion of sales this year. Will they catch up with NVIDIA? Will they pull ahead of Intel? The above or below, that's the story. Then Amazon's down a percentage point. It is interesting. The bar so high following Alphabet, the parent of Google, and Microsoft earnings, because both showed growth in their cloud sales, but both gave us either numbers or evidence that contributions to cloud growth specifically came from AI. In Amazon's case, advertising is also really interesting, right? So 12% overall top-line growth, but it's the first quarter where since January they've included ads in Prime Video. Does that show up as revenue? Really interesting. And then Pinterest. They're not seeing any user growth, but the street carrier thinks they might be okay because it's been a mixed picture so far, but on the whole, maybe advertising not so bad.
And Pinterest is just a different type of a business, isn't it, Ed? And the fact that we've seen Pinterest try to really focus in on, well, this is a safe space, an optimistic place, particularly in the current political narrative, I'd say.
Yeah, and one thing I want to know as well is, like, ads meaning what? Like AI ads, ads or AI? I still don't quite get that story.
We've got someone who knows everything about ads and AI, luckily joining us now, Integral Ad Science CEO, Lisa Utschneider. Integral Ad Science actually helps advertisers at Fortune 500 brands measure if their campaigns are appearing next to safe and suitable content across Meta, Instagram, TikTok, YouTube, Pinterest. We're just talking about Spotify, LinkedIn, Snap, you name it. You measure it. And I'm really interested by what ultimately your bread and butter business has been looking like of late. Have brands felt more secure through your data to come and align their ads next to those of, well, but use more Meta, Pinterest, Snap, and the like?
Sure. Integral Ad Science, and thank you for having me. We're a leading digital media quality company, and we focus on exactly what you're speaking to, measurement, optimization, for over 2,000 brands worldwide. We work with the leading platforms and publishers. And we've built a technology backed by AI. It's a multimedia classification technology where in the live feeds of all the major social platforms, we are classifying video, image, audio, and text, ensuring that the brands are running adjacent to brand safe and suitable content.
And has the data been getting better?
The data is absolutely getting better. Our technology is highly sophisticated. We're classifying frame by frame. And what I mean by that, if there's, let's say, a 30-second TikTok video running, we are classifying every single second of that 30-second TikTok video to ensure brands aren't running adjacent to unsuitable content like hate speech, violence, and as we rolled out recently, misinformation.
Lisa, is Pinterest a platform you take seriously in the context of ads?
The brands take all of the platforms seriously, including Pinterest. And as you look at the size of the digital advertising market space and the fact that advertisers, they're pouring billions and billions of dollars into digital advertising, they want to ensure that an independent verification company like Integral Ad Science, we are classifying and verifying the quality of the media, and that we're holding the platforms accountable and responsible. Again, ensuring that we're identifying the inappropriate stuff and helping advertisers run their brands adjacent to more appropriate brand-suitable content.
And we'll see how those social media companies have benefited from some of that growing confidence. Lisa Utschneider, we thank her for being here, Integral Ad Science CEO. Meanwhile, Ed, what have we got coming up?
Okay, a billionaire behind bars. We'll dive into the sentencing hearing of Binance's founder, which is starting today, what it means for the Binance and his empire, and some important reporting. That's next. This is Bloomberg Technology. Changpeng CZ Zhao, the billionaire founder of the Binance crypto exchange, is starting his sentencing hearing today on anti-money laundering charges. And prosecutors are recommending the court give him 3 years in prison, double the maximum that guidelines prescribe. Let's go out to Bloomberg's Olga Karif, who has all the details. Olga, what are we expecting?
So we are expecting the hearing perhaps to last not very long, a couple of hours. CZ will probably speak at the hearing, and his lawyers are pushing for probation and sort of much, less harsh sentence than what the prosecution has asked for. And of course, you'll recall that in November, CZ pled guilty to a number of charges, and he agreed to pay a $50 million fine, and Binance agreed to a $4.3 billion fine. And today we'll find out sort of what happens to him. He still retains his ownership of Binance, which has been doing extremely well, especially in this year's sort of crypto bull market, driven by the introduction of U.S. spot Bitcoin exchange traded funds.
Well, Olga Karif, we thank you for really an amazing read. It's the big take today. Go online, go check it out, because it really is about ultimately the fortune of CZ and how that doesn't seem to be being dented anytime soon, whether he serves prison time or not. Meanwhile, though, there is a whole raft of other crypto news to be getting into, and a batch of ETFs that we were just talking about investing directly in crypto just debuted over in Hong Kong. So is this competition to the US Bitcoin products? Is this going to bring in new investors, particularly over in Asia? Stillmark founder and managing partner Elise Killeen joins us now. Look, Stillmark is a Bitcoin-focused venture capital firm. You've got $85 million in assets under management. You've been doing this for a long time, looking at the protocols, the real use cases of Bitcoin. This is ETH and Bitcoin spot ETFs. What does this mean for the industry?
Well, it's the first time we're seeing the ETH ETF perform against Bitcoin ETF. And what we saw in Hong Kong's day one launch was that much of the activity, the vast majority of the activity, was in the Bitcoin ETF. We saw about just under $13 million of trading activity, which is a lot for the Hong Kong market, sized at $50 billion. Issuer China AMD has reported $141 million in assets under management after day one, and 86% of that is in the Bitcoin spot ETF.
Elise, why is it important that we have multiple markets? New York, Hong Kong. We talked the other day about Australia thinking about its place in this market.
It's a great question. First of all, of course, Bitcoin's price is a product of adoption and expansion of its utility set. As these ETFs are introduced in new markets and new geographies, we are advancing adoption. We're bringing a new group of users into Bitcoin through a regulated product, albeit one that relies, of course, on a custodian. We're also moving closer to having a 24/7 spot ETF market, of course, with the addition of Hong Kong.
I'm interested in Hong Kong specifically because of its relationship with China and the regulatory oversight. What does this mean for China's relationship with crypto?
Yes, exactly. Many are interested for exactly the same reason. Now, of course, in the launch of the Bitcoin and ETH spot ETFs in Hong Kong, people in China do not have access. So it's a more curtailed audience, of course. That said, we are still introducing an entirely new audience and one that thinks differently, has exposure to different media sources, and we expect that this is a positive sign for broader proliferation of Bitcoin products in Hong Kong and in the region exposed to this product.
Stillmark founder and managing partner Elise Killeen, we really appreciate your real-time global perspective. And fortunately for our audience, there's more coverage of those ETFs and the CZ sentencing at the top of the next hour on Bloomberg Crypto. The understanding is that in the CZ hearing, at least, Caro, a lot of that will kick off around midday New York time, which is 9 a.m. out here on the West.
Pretty perfect if you want to be digesting that in real time with a crypto show. But we sort of tease ahead to it. But for now, that's our job done on this edition of Bloomberg Technology.
Yeah, a really massive aftermarket earnings situation that we're going to be tuned into, and tomorrow is going to be a big discussion on that. The pod on Apple, Spotify, iHeart, the Bloomberg platforms. Thank you to listening to the podcast. This is Bloomberg Technology.